Good afternoon, everybody. Welcome to the session today. I am well, thank you very much. I hope you can see the screen. Yeah, looks as though we can. I'm good, thanks, Keith. G'day, Ross. G'day, Gigi. How are you, mate? Hey, Shane. Thanks, Wayne. That's all good. Right, let's get things kicked off because there's a bit to cover. I'm really keen. Hey, Chris. Really keen that you get a chance to. Hi, Chris. We'll get a chance to sort of put some charts up for me to have a look, as well as my meanderings around the market. So let's, without any further ado, just pop up this disclaimer and risk warning, of course. These are the opinions of myself, as based on my independent analysis and not representative of Go Markets. And of course, as we are looking at live markets, please bear in mind that this is for educational purposes only, and so therefore anything you see or hear should be taken as such rather than advised to take direct trading action. You've got trading plans to guide you in that, I'm sure, and if you haven't, you're going to get one quickly, aren't you? Anyway, let's have a look at what's coming across the news to start the session. We've got a mixed session on Wall Street with the Dow, the outperformer. There was a little new market information yesterday, really, so it was just a little bit of repositioning. Very little economic data out, although the end of the week is going to be a doozy. We've got jobs data. We've got the ADP out tomorrow, then the weekly jobs on Thursday. Now, interestingly, with it being Good Friday, the stock market's closed in the US as well as here, of course. But we have got the non-farm payrolls out, which is unusual. Now, historically, sometimes markets have been open for the first half of Good Friday, but not the case this week. So expect quite a lot of caution through the week as we go. And yes, of course, Rod, you should have a journal as well. What's happened in Asia since open has really been quite flat. We had, in terms of the FX and the indices, we'll have a look at that in a moment. But Asian markets look mixed and cautious. The ASX started up quite strongly, around about 0.4%, and but has since turned negative based on weakness across some sectors which are important to the markets here. And look, I just got this feeling that things may continue in this ilk, possibly until the next earnings season starts, which is just around the corner, less than 2 weeks away. So that's going to be the major market driver towards the back end of the month. And maybe markets are just pausing to see how those figures come in. Of course, COVID incidence in Europe is twitching the market a little bit, and that may be part of the caution. We saw the US dollar index pull higher again yesterday, and it looks higher in Asia as well in early trading. And precious metals remain under pressure, with silver testing key support, actually breaking through it yesterday. Japanese retail sales are already out, and not employment, and they've been pretty positive, but it's not affected the yen significantly. We do have German CPI, so that inflation data from the European powerhouse will be looked at with interest, bearing in mind some of the bond yields that have been present of late. We did see a slight up move again yesterday in bond yields, which is possibly, again, part of the reason the markets were a little muted. And we've got US consumer confidence and housing data out later, but neither of those are really significant. It's going to be the manufacturing PMI data and the jobs data later in the week that's going to be the market mover, if anything, this week would suggest. So just to put a little bit of meat around those bones, let's just quickly have a look at the futures. You can see the Dow is positive. The Russell is getting absolutely smashed. The small cap index down almost 3%, and that may be as a result of all of this, all of the margin calls and funds funds selling off assets, etc., that has been part of the news back end of last week and early part of this week. You can see the Nasdaq is underperforming the other two major indices. If we look at the currencies, quite an interesting picture here. We don't normally see this, but we're seeing both the USD and the commodity-based currencies in the Aussie and the Kiwi both looking stronger today. The weak link is again the Japanese yen, although the GB pound is not far behind. Other currencies are sort of neutral against the USD, but we'll have a look at those in a second. Note the 10-year bond note is down in the futures contract. Also, gold and silver not looking particularly pretty, and we've also got some pullback in oil over the last week, although that seems to be holding its own where it's at. So that's essentially a summary of where things are. Copper continues its merry way down. We'll just have a look at a copper chart because this is important. If we just pop on, you can just sort of see that we've almost got a descending triangle type picture here around that $4 mark, and really significantly off the highs that we hit in early March. And we can see this in some of the resource stocks going forward. If we look at charts now, whether we've found a bottom or not remains to be seen, of course, but again, we are down today as well, and that's a sort of drag on things a little bit. Let's just have a look at some charts. Start with the US 500 day. You can see we hit record highs again 2 days ago. We were neutral yesterday, and we're just marginally to the downside in futures contract today, but there's just not enough good news to push markets or push the S&P 500 certainly any higher than that record high of 3970. So as I said, it may be that we trade within a range over the next couple of weeks until we start to get some of these companies that make up the S&P 500 reporting. If anything, would suggest that the downside pressures may come from bond yields or worsening COVID news, may create a blip to the downside. On the upside, it could be that data that comes in towards the back end of the week that would push it higher. So it's a bit it's a bit sort of unknown in terms of where the immediate short term may go, though one would suggest that those two things are the major drivers, so just keep an eye on those. I'll just put a Nasdaq 5-minute chart up, and you can just see how this has dropped off since Asian Open, just as that caution becomes an issue. And this is actually starting to look a little bit like, if we put it on the hourly chart, it's starting to look as though it may well work its way back down to support at around about 12,860 in the first instance. So you can see there, over the last sort of 36 hours or so, we've been trading in a range with 1,300 at the top and this 12,860 at the bottom. If we do break through those, then 12,800 could be on the cards. And the US dollar index, as we said, we hit highs again yesterday. We're using the 200 MA, it looks like a support. We put this line on the other day, or last week when we met, at 92.60. And so this represents a high not seen since early November. You can see there we were last around this area about then. And that again has something to do with bond yields. If bond yields are increased, then that's essentially the bond market saying we expect interest rates to increase possibly slightly earlier than anticipated, and hence that's bullish for the USD. Now, as I said, it's an interesting mix that we've got here. We'll start our look around the US-based currencies with a US yen. We'll just bring this, I've put it on a wide chart just so you can see the significance of this 109.80 level that we're at now. You can see how it was a resistance right the way along here. Another shot at it in June last year, or probably May last year, and you can see over the last few days, there's that breakthrough we had, followed by yesterday's, and today's action has followed through on that. And you can see how that's testing the pivot highs back there from May, end of May, as we said. And really sort of, if we do break that level, you've got to go back to a weekly chart to look for the next one, and it's not easy to spot. Perhaps around that 110.45, but 110 would be a significant psychological level for the market, without a doubt. We mentioned that there was some strength in the commodity-based currencies in comparison, and here's the Aussie USD. You can see, despite that yen weakness, still that really strong US dollar movement in versus yen, that wasn't mirrored in the Aussie dollar. You can see yesterday's action there was pretty neutral around about this key level here. That was resistance, support, brief foray through that. We've made our way back up in Asian trading now to retest 76.40. The Kiwi's not in a dissimilar place, slightly lagging the Aussie dollar a little bit, but we're looking at that 70-cent level as important. So I'd actually bring that down a little bit. There we go. You can see how it was support here and here, and really has been pushed against for the last 3 sessions. So the Aussie looking slightly stronger. And with that yen weakness, actually, let's just have a quick look at euro. Euro Aussie dollar. We should really do that, shouldn't we? Sorry, euro US dollar. You can see that break through the 200 MA. You can see how that's underperformed. Euro was down yesterday, and of course the US dollar index has a weighting. There's about 55% of it is the euro performance versus USD, and a lot of the rest is the yen. So with euro and yen down, you can understand why those charts are as such. So if we look at the strongest versus the weakest currencies, let's start to have a look at something like the Aussie yen. You can see that strong move over the last couple of days, a little neutral yesterday, but you can see that push higher in Asian trading today. If we pop it on an hourly chart, you can see that Asian action. We're actually trading towards the top of the session. If we just take this out, this looks like an important level where we're trading now at around about that 83.90 level. So a breakthrough that could see us up around about 50 pips to this 84.41. So there could be a short-term opportunity to the long side here. And as you can see, we're just poking our head above that level right now. Just put on a line chart just to give us a little more clarity. Just move it down a smidge to hit those closing highs. Then you can see it is actually breaking. So 15 minutes time, you can be having a look at those candles. The ATR, let's take the 6. As the ATR is 8 pips. So we're looking for a 4 pip move over that 83.89. So the Aussie yen is our FX chart of the day based on that, based on the fact that it looks as though it's ready to pop, and but with limited upside, of course, so you've got to be quite nimble with that. Major trend channel going back to 2006 on US yen. Absolutely, I would say that's the case, but we've possibly got a, no, if I just take this out a bit. So undoubtedly trend channel going on here. Let's just get rid of that line for a minute. It's interfering on my business. The only exception to that would be what happened. Come on, move. That would be what happened here. But undoubtedly it's trading towards the top of that trend channel there, as you've correctly stated. It's been in place really since 2016. So that's interesting for sure. Right, let's have a look at the New Zealand dollar. JPY on the hourly chart, you can see again a similar sort of story, slightly more upside in this, which makes it possibly more attractive than the AUD. Be careful if you're going to position in both, of course, because you're double exposing to the yen weakness. Well, this worked very well on Friday, I have to say. But you can see there's almost a 100 pip move up there. Now, what was attractive about this is that there's no technical landmarks at all. It was almost a straight line down. If we look at the closing prices, we rarely see this degree of movement in one direction. Virtually no retracements in that at all. So we could quite easily see it sort of come up and test that. That's the only technical landmark we've got we can plant our flag in. So even that's 75 pips. So there's an attractiveness there. For those who, I don't tend to look at it particularly often, but you can also see that it's a 200 MA break on the hourly chart as well. So both of those are interesting. I would plump for the Aussie perhaps because it's just looking slightly stronger this morning at this stage, but either looks very favorable to the upside if we get a breakthrough. Another interesting one I had a look at this morning, it just caught my eye, was the Canadian dollar yen on the hourly. Let's pop it to the daily chart first of all. That's the closing high that potentially is the upside on this, so around about 87.70. We look at the hourly chart. And we can see something sitting at 87.36. So despite the attractiveness of these higher lows and coming up to a level here of interest, again, if we put it on a line chart, you'll see how that was a level of interest. And the actual upside of this, and this is why I'm putting this chart on, is a lot less attractive than either the Aussie or the Kiwi. And so that's one of the reasons why looking at that futures chart and just seeing what's moving better will give you a little bit of time leverage to go in and look at the pairs that are more likely to move. I'm not saying the Canadian dollar yen isn't of interest at all. It certainly would be if we broke 87.70, but that is worth being patient for. If we look at a weekly chart, just to give context, then that would represent highs not seen since November 2018. And may take us up around about 80 pips or so. So better opportunities than that, even though that looks like an interesting chart. We didn't have a look at gold and silver, so let's do that now. So those of you who attended the gold webinar on Thursday last week, great to see there, first of all. But secondly, you can see this bounce off the 1750 level, which we talked about then, and that US dollar strength yesterday pushing gold down again. And it does look as though it's going to come back and test these lows we had in early March. Silver, which has held up relatively well in comparison to gold, where 3 candles here which are almost neutral in consecutive days. Just the market rejecting a move below that support at $25, but there you see we got it smashed through yesterday. And really, if we go any lower than we are now, though we're pretty neutral in Asia so far, then in the first instance we could quite easily see it down at $24, which is about 3%. And then if we break that, then all hell break loose, we're down 8% potentially. So watch this key level here if you're interested in such. So a quick look at oil, because this obviously has impact on some of the oil stocks I know that you guys, some of you guys like. We sort of talked about this $5 rule on oil. So there's the $70 mark. There's the $65 mark that the Brent contract is trading now. And there is the $60 support. So remained true to its $5 increments. This was obviously on the back of that big tanker stuck in the Suez, which have now released. So we may get a little pop up now that has resolved. So just watch this 65 level on the Brent contract. Could see this starting to creep up as some buying pressure comes back into this. Much will depend on the market's feeling about the impact of that going forward, I guess. Okay, so let's just have a quick look at what's happening on the ASX front. We'll just do a little screen switch or two. So, you can possibly tell by my response I wasn't very impressed with that. Okay, so there we go. So you can see that it's down, excuse me, down almost. That's better. It's down almost 0.4%. And towards the lows of the session. So really, as I said, we started off pretty good at 10.18 once all the market was open. We're up about 0.3, 0.4%, and we've reversed that completely. If we look at the sectors that are, if we look, first of all, look at the advances declines, you can see why that is. We've got a almost a 3-to-1 decliners versus advances at this stage. Remember, this is always a good gauge as to where the market is at as a whole. Then we can look at individual sectors, so let's do that. So we can see the banking sector. If we look at ANZ, if we look at CBA, if we look at what WBC at the bottom. So all the banking sector are down. Travel sector struggling because of those COVID incidents. So we're seeing Webjet down, and we're seeing Qantas holding its own earlier after really a pretty shocking few days. You can see it's just up a little bit. So Qantas may be an interesting chart to have a look at. If we look at the business orientated stocks, so Xero and Zip both doing well. Xero particularly, which were our chart of the week from last week. And although Woolworths are up, it's very difficult to see anything else that's doing well. We look at resources with copper down, with oil down. We see BHP struggling. We see FMG, same, 1.5% down. And Oz Minerals, again, 2% down. So if we look at the overall picture, we're seeing a drag on the market from the two biggest sectors, which occupy around about 50% of the entire ASX. So resources and financials, both dragging the market down significantly. And so it's even healthcare isn't having a particularly good day. So really quite a lot of drag on the market. It seems to be those defensive stocks which are doing well. So the property REITs, some of the business stocks are doing okay. Even healthcare is not doing particularly well. Fisher and Paykel are down. If we look at Sonic, for example, Sonic are having an up day, so a bit of a mixed day on healthcare. So there may be Ramsey down a little bit and ResMed up a bit. So mixed day on healthcare, not doing any major damage. So it's resources and financials that are looking shaky. So let's have a look at some of those charts. Makes sense to start with the outperformer. So this, remember, going back to our market assessment, our overall big picture. So what is key is that first of all, there's no massive risks going on today, apart from just a general caution in the market. With the exception, perhaps those bond yields are slightly sort of quivering a little bit again. So there's no real reason to sell off significantly at this stage, and there could be some tailwinds coming along later in the week, depending on that. If the economic data continues to show signs of recovery, so I'm not predicting a market sell-off significantly, but I'm predicting market caution, which may influence your position sizing. and may influence how many positions you have open. It may be one of those markets where FX is actually a slightly easier market to play than stocks at the moment, and I know that was the reverse of the case for a couple of months there, as you'll have heard me talk about before. But certainly, sorry, not. No, it should have been okay. So let's have a look at some stocks. Let's have a look at the overall index first of all. Let's drag. Let's drag it on. Now I've had a look at the market. Ooh. Overall. So you can see really the ASX daily here is still trading within this range that we've been in for some significant time. We're still looking to break 6,800 with any conviction. And to the downside, we'll put this on here. You can see that really to the downside, we're about 6,700. So around about 160 point range. And we've been in there since the beginning of the year. So around about 2.35% from top to bottom. Nothing to suggest anything different, apart from staying in this range on the ASX at least. So if we look at some of those stocks we talked about. So here's Xero. As I said, this is our chart of the week on Thursday. We had a little bit of a, so this is where we looked at it last week. Looked as though it was breaking through 127.57. It's not been an easy ride since then. You can see this choppiness going on, but today's bar is interesting. As I said, one of the outperformers of the market. We're looking for a break, really. If you're in this already, there's a potential to accumulate into this. If you like this as a stock, next potential key level after this 127.60 is around about this 135 level here. There we go. So that's a potential upside in the first instance, but this is a stock which is quite strong fundamentally, and hence of interest. And so it's really difficult to move past this as the chart of the day again. We'll just look at some of the miners just to sort of give you a feel for what's going on. On the back of that copper weakness, we've got support in, as we have on copper. Copper being the king of base metals, so it looked as though we were in for a reversal yesterday, but we've given that all away. So if we're looking at something like BHP as an indicator, then 46.80 would say that some significant buying pressure coming back into that. Go down to Oz Minerals, which is getting quite thumped. Today it's actually held on relatively well compared to some of its counterparts, but we're at a key level here. I just put this on a line chart, you can see it a bit more clearly. There's the level of interest to the downside at 22.60, so we're actually testing that today, but really we have done for the last 3 days, so no appetite for resources at all. If we look at some of the banking stocks, these are looking interesting to the downside. We've got what looks like a double top formation around about this $28. We talked about $28 before being a key level on ANZ, and so we're testing that today. We've not got to cross to the short-term MAs as yet, but that has some potential to get sold off significantly if we do get a break on that. You can see how solid that support has been. So despite the day-on-day fluctuations, again, no appetite for getting into banks at the moment. CBA, a very similar story to the index as a whole, not surprisingly. Looking as though we're in a downwards trend channel at the moment. So there's the top of that. There's the bottom of that. If we had to put a line in the sand in terms of what could constitute a breakout, to the downside, it would be around about that 84.50 level, down to around about this $80 is the potential on this. NUF, certainly Ross, not one I think I've got on here, but we'll have a look. New Farm, I think it is NUF from memory. Dragger on. Very interesting. Good chart, mate. Nice support. Okay, so what we've got here is, if we just pop this back to a weekly chart just to see context. Now you can see how important this level is, even on a weekly chart. But you would say the upside is possibly limited to that 540. So although this level looks interesting, as it's hit this a couple of times, and that's obviously where it's trading right now. If we do get a break of this, get tight with your supports behind anything, but there is a nice uptick to around about 15% up to this next level if we should break 540. So and that would make sense. Using half an ATR above this line here, that would take it up to 547. I guess would be the level on the weekly chart. Look at the daily chart there. That's why I'm saying. So that, sorry, on a weekly chart would be 8 cents above that. That makes sense. I thought that was a bit much. So it'll be at 536. I would take it over these wicks here. So around about that 540 level would be of interest. But nice chart for sure. And plenty of potential upside in this. Looking at Qantas. Qantas obviously have suffered a little bit because of those increased COVID incidents and lockdowns in Europe. Makes the prospect of a global recovery in travel that much far further away, it seems. But we do seem to have found a bottom for right now. You can see we've traded along this around about this 508 to 510 level for the last 4 trading days. We're trading on that again. Way too early to get into this unless you're in already. So it would take a break above that level around about 517 or 518 to get interesting again to the long side. If you were to look at this short side, it's going to be very choppy. We've got, you can see how much noise there is in between sort of $4.80 and $5. So you could put a number of different levels on this, but I guess that's the most prominent, about 486. I'm not sure. Even higher than that, potentially around about that 488. So even if we got a break through this, and let's say we entered at that level there, we've only got about 2.5% of the downside potential. So I'll be seeing, looking at this chart, it says wait to see if there's a bounce. If there is, and it does break that 520, then there's upside potential there. That's what that chart says technically to me. Woolworths seems stuck, essentially. There we are stuck. Okay, so look at close prices. There's the resistance there. I think we talked about this on Thursday. So you can see how even today we had an attempt to break through that on that early positive market open. We've just moved our way back down, as with a lot of the market, to key level below 450. And in fact, if we were to put on, let's just put a MACD on this just to, it looks okay from a MACD point of view, but look, again, if we look at the upside potential on this, and we're going to get stuck around 2% higher. So for that, so you could have a risk reward perhaps down to around about stop at around about 1.2%, a profit target of about 2.7%, so around about a 1 to 2 ratio risk reward if you're interested. WPL, really not doing a great deal based on that oil price, and we did have a pullback over the last couple of weeks which corresponds to that, and we've got a more established key level than the bond we're trading at around about 23.67. So I wouldn't be interested in a short in this, and that just corresponds with the 200 MA as well. So there's a couple of reasons there. So let's just bring that down a bit. So 23.60 would suggest a short in opportunity, and maybe move down to around about 22.04. Any others you want me to have a look at? I'll just quickly have a look at the US. Yeah, I can have a look at cryptos. Let's get rid of some of these lines. There we go. So if we look at Ethereum, you can see how we're trading near resistance at around about 1800. Moved back up over the last few days after that pullback, which was essentially, whoops, that corrective pullback was around about 12%. If we look at Bitcoin, again, we had that pullback of around about 11-12%. So as always with Bitcoin, we get the pullback, then we get the move up, the pullback, then the move up. So we're waiting for a break of this pivot high to suggest that this is worth looking at in the short term. So you go around about 58700, let's say 58800. Obviously we'll take the ATR in, which is pretty special in terms of its size. Okay, yeah, I can have a look at GB pound yen. Not that dissimilar to the crypto chart actually, but you can see there that GB pound on the daily chart has a resistance there around about 151.86, so not far up to that. So around about 40 pips, so real nimble in and out trade if you're going to trade up to that level. Any more for any more? US Swissy. Okay, on the daily chart, looks very interesting last week. But really since that breakout of 93.51, it's not moved very far at all. And if you look at the last 4 sessions, we've had a top at around about 93, let's say call it 94. Nice round number, wouldn't be interesting unless it breaks 94. Let's put a line in the sand there. It's close enough. Let's look at an hourly chart. So even then, you'd be tempted just to the ATR very low on this. So around about that 94.15 would be interesting, unless you're going to trade really tight time frames and big volumes. It doesn't look like a nice chart to me at all, unless it does some more work. LYC for Bob. LYC, of course, have been one of our stocks of interest over the last few months. Is it still a stock of interest? Let's just have a look at the daily chart. A nice bounce again. So again, let's put this on a line chart just so you can see it clearly. There's the support in place. at around about 560. There's the resistance in at around about 636. So we've got some upside in that. So upside, undoubtedly potential up to that level. After that, it gets a little tricky. You can see how many times we had an attempt to break through this. And then, of course, we've got this record pivot high close. So this record close at around about, what was that, 665. So it depends on how aggressive you want to be. For a short-term trade, it doesn't look as though there's a lot in it at this stage up to that next resistance. If you're looking at this long-term, as a long-term hold, it does look as though it's setting up rather nicely, but just a little bit more patience until the technical planets are aligned at least. But keep an eye on this over the next week or so. If you're looking at this long-term, I think it's a good chart to have a look at, Bob. It's a good example of that. Now, just a couple of things coming up that you really don't want to miss. Actually, you don't want to miss this at all on Inner Circle on Wednesday. I'll just get the link for you in case you're not enrolled in that. I think most of you are. But we're going to talk an accumulation strategy. So, which is not that dissimilar to that which is going on with XRO at the minute. So it's called accumulation into a profitable position, new approaches. Tell your mates, invite them along. It's going to be a good session, I think. Come up with some new thinking around this. So I'm just going to put it into chat. I'll call it accumulate. I'm also going to talk about reduction strategies as well. Not something I tend to do often, but it makes sense to look at both of them in the same way. And why this is the only real way to go, rather than dollar cost averaging. Back to the charts. Okay, a couple of last ones to have a look at for you that you've put in. Oh, we haven't had a look at the US yet, have we? US is difficult to pick because if we look at the map, it's quite sort of unusual. But oh, good grief, what have I done? But what we'll do is we'll just look at Apple. Just put it on there. So have a look at Apple, and Apple looks as though it's setting up nicely. So again, put this on a line chart. It looks as though there was a double bottom forming around here, albeit a choppy double bottom. There we go. You should see it now. You can see it now, guys. Not sure what happened then. So we had like a double bottom, but really we were more interested in this as a level here, around about this 120-150. So you can see there that we've traded around that now for the last 7 sessions. So Apple looks as though it's brewing for some, sorry, that's an hourly chart. Right through last night, it was at that level. So it looked as though it might be a breakout on the hourly chart, which is not something I do a lot of unless I'm up and watching. But it's not that dissimilar to what we're seeing in on the daily chart as a whole. So we're midpoint between that key level at 124.33 and this key level at around about 118. Okay, so we're trading bang smack in the middle of this. And so if we start to get a push up on this, and Apple have had 3 positive sessions, so it just suggests some buying maybe coming in. If we get a challenge of 124, then this could be worth having a look at. I would suggest the upside is probably around about this 130, 131 level, somewhere around there. So that is of interest and would be our US chart of the day, but one that will need some cooking. Oh, good. Okay, one other from the US, and then there's a couple more Australian ones that have been suggested. Intel. Just let this catch up a little bit. So Intel are interesting because they've hit a block to the upside. Lots of interest in semiconductors. 65.71 was the closing high. We've hit twice on close, but also tested that 1, 2, 3, 4 occasions in the last couple of weeks. And you do see that this is a potential higher lows over the last couple of months that have brought it up to this point. So we're in a bit of a trend channel going on. If we do get a break of 65.71, that looks very interesting. And sorry, I'm just trying to find it. There we go. Netflix doesn't float my boat at all. Best thing I can say about this chart is it's using the 200 MA as support, and we have had a substantial bullish candle in the last day of trading, but upside on this, you probably wouldn't get interested until it broke 535, because then that's going to give you some upside potential of around about 5%, and a possible accumulation into it if it continues that way. So that's not filling me full of joy. And if we look at the one you asked to look at, Luca, I know we had a track on this before, and again, it looks as though it's shaping up nicely. Now, just take this back just to give you context. Okay, this is one of the stocks that really adheres to this 200 MA quite well. You can see how historically it was resistance, support, and now a resistance there right throughout February, and now we're retackling it again. Although we've come off a little bit in since again that strong open we had in the market, so we're towards the lows of the session. But that 200 MA is one to keep a close eye on, and one of the reasons I like this, though it's one to file possibly for the next couple of days, is this big gap here. So if we do get a break, remember closing high is what we're looking at. So I'm liking this at around about 750, not that far away from that. So one that could cook in the next couple of days. If it breaks 1750, not only is it broken that resistance, but also the support. So I wouldn't be surprised to see this, if we do get an uptick, become our chart of the day on Thursday. But one to keep an eye on for sure over the next couple of days. Okay, guys, well, look, I hope that's been interesting and useful and giving you some things to have a wee look at. Look forward to seeing you on the webinar tomorrow. For those of you who are in a position to rock up, and if ever you're in a position where you can't make it along, would like the recording link, then of course drop me an email and I'd be happy to oblige. So take care of yourselves, trade safe, enjoy the rest of your day, and we'll catch you again very soon. Bye-bye for now. You're welcome. GG, Shane, Ross, Wayne, Chris, Bob, you're all so welcome. Great to see you. See you later, Chris. Bye.